Hey everybody, welcome back to Sovereign Money. In today's video, we're going to do something completely different. I'm going to be doing a slideshow. Yes, my first ever slideshow. So let me know how it goes in the comments below. And if you're ready to go, let's get to it. And this slideshow and this video is about strategy, formerly known as MicroStrategy. They've been in the news a crazy amount lately, so I decided to do a little deep dive, I don't like that term, on MicroStrategy or strategy and see what the company was all about. And I'm going to fill you in on today's video. Strategy stock just crashed 61% since its July 2025 peak of $455 per share. Wall Street is dumping shares like they're on fire. Peter Schiff is taking a victory lap, and the CEO just announced something that has traditional finance completely terrified. By the end of this video, you'll understand why the institutions that are selling might just be making the biggest mistake of their lives, and why some of the smartest money in crypto is doing just the opposite. That said, this presentation should not be taken as financial advice. This is for information and entertainment purposes only. For advice regarding your unique financial situation, you should meet with a real financial advisor and then do the exact opposite. Let's get on with the show. Here's what's really happening. Strategy, the company that owns 650,000 Bitcoin, 3% of the Bitcoin that will ever exist, just weathered a coordinated attack from traditional finance. While their stock price crashed 61%, the fundamentals remained rock solid. They bought their Bitcoin at an average price of $74,436. And even after Bitcoin dropped from 126 all the way down to 80,500, they are still profitable. They also just announced a $1.44 billion cash reserve to certify payment of their dividends during market volatility. And those institutions who dumped billions of dollars of shares of MicroStrategy, they're the same people who missed Bitcoin at $100, $1,000, $10,000, and $50,000. So why does this matter? Because many public companies face a silent killer, and that is inflation eating away at their cash reserves. Traditional treasury strategies, government bonds, and savings accounts are hemorrhaging value. Take the TLT ETF. It's a safe 20-year treasury bond ETF that your advisor told you should comprise about 40% of your portfolio, right? Well, that safe choice has generated a whopping 7.64% gain in total since 2002. Not annually, total. It took TLT 23 years to barely match 1 year of inflation. And in the last 5 years, TLT's value has dropped a whopping 42.78%, nearly half of its value gone. While traditional finance kept losing money in safe bonds, Michael Saylor saw something different. Since August of 2020, he's accumulated 650,000 Bitcoin, worth approximately $58.5 billion at today's prices. Hopefully, the price will be different when you're watching this. That represents billions of dollars of unrealized gains, even after the most recent pullback. By the end of this video, you'll understand why this crash is actually the setup for one of the greatest investment opportunities of the 2020s, and why traditional finance is terrified of this model, and why the next few months could define the future of corporate treasury management. Let's understand what Michael Saylor has actually built here. In 2020, Strategy, or MicroStrategy, was just a business intelligence company with a brilliant founder who saw what most of corporate America was unable to see. That is, the traditional treasury playbook was destroying shareholder value. Saylor realized that keeping so much cash on the books was financial suicide. With the Federal Reserve printing trillions of dollars and inflation running hot, every dollar sitting in corporate treasuries was losing between 3 and 7% of its purchasing power annually. He needed a treasury reserve asset that could preserve and grow corporate purchasing power. In August of 2020, Strategy made its first Bitcoin purchase. They paid $250 million for 21,454 Bitcoin at an average price of about $11,600 per Bitcoin. Wall Street lost their minds. They said he was completely crazy. Remember, this is the same Wall Street that tells you to buy bonds for your portfolio, for your 60-40 traditional split portfolio, that would lose 47% of their value over the next 5 years from the time that he purchased the Bitcoin. But Michael Saylor wasn't gambling. He was recognizing what Bitcoin actually is, the hardest money ever created, with a fixed supply of 21 million coins, no central bank that can print more, and adoption that's growing globally every single day. And here's what's fascinating. Saylor didn't just buy Bitcoin as an investment. He transformed his entire company into what he calls a Bitcoin treasury company, the world's first publicly traded vehicle that lets regular investors get leverage exposure to Bitcoin through traditional stock markets. The financial engineering strategy deployed is nothing short of genius. According to CoinDesk reporting, Strategy announced their 21 by 21 plan, raising $21 billion in equity and $21 billion in debt over a 3-year period, all to accumulate more Bitcoin. And they executed it brilliantly and way ahead of schedule. This is the innovation. They issued convertible bonds at incredibly low interest rates, sometimes 0%, because bond investors aren't buying these bonds for yield. They're buying these strategy bonds for exposure to Bitcoin's upside with significant downside protection. It's asymmetric risk-reward at scale. When Bitcoin rises, strategy stock rises even more dramatically. Fortune magazine reported in 2024 that while Bitcoin gained 117% that year, strategy stock went up a eye-watering 477%. I remember that. But there's even more innovation, and that's what Saylor calls Bitcoin yield, which is the rate at which your shares of MicroStrategy accrete more Bitcoin over time. When you buy shares of Strategy, each share represents a fraction of their Bitcoin holdings through their capital raises and strategic purchases. That fraction increases, and you, as a shareholder, end up with more Bitcoin per share just doing nothing. Now, that is something that you cannot get just buying Bitcoin directly. You'd have a fixed amount of Bitcoin, which is great, but that's it. With Strategy, your shares gradually accumulate more Bitcoin exposure as they execute their treasury strategy. Pardon the pun. And Strategy has also introduced multiple preferred share offerings. They're known as Strike, Stride, Strife, and Stretch. And then there's a European one called Stream. Each of these pays between 8 and 10% dividends, which attracts even more capital. And they recently announced that these dividends are being classified as return of capital, making them tax-deferred. This isn't a bug, it's a feature. They're offering investors income and Bitcoin exposure in one security. Strategy now holds 650,000 Bitcoin. When Bitcoin hit a price of 126,000 in early October of 2025, they were sitting on over $32 billion of unrealized gains. The model worked exactly as designed. They outperformed Bitcoin itself by using smart leverage and capital market access. According to research from Bitcoin treasuries, they've created what no company has ever done before, a perpetual Bitcoin accumulation machine. This machine benefits from Bitcoin's appreciation while giving investors leveraged exposure through equity markets. Michael Saylor puts it pretty simply. We found a way to outperform Bitcoin. The way that we outperform Bitcoin, in essence, is we lever it up. Over 140 companies worldwide have adopted a version of this strategy. This isn't just a fluke company. This is a revolution in corporate treasury management. So, what is all the fuss about? Bitcoin pulled back from 126,000 in early October to 80,500 by late November, a 36% correction, which is actually completely normal in Bitcoin's history. Bitcoin has had 5 to 7 corrections of 30+% during every single bull market. This is just how Bitcoin works. But strategy stock, it dropped from $454 a share on July 16th to $177 a share by late November. And it was actually a bit lower than that. That's a 61% decline over nearly 5 months. And here's the really interesting part. Strategy stock started falling months before Bitcoin price peaked. While Bitcoin was climbing towards 126,000, In early October, Strategy had already dropped 40% since its July high. Then, when Bitcoin finally corrected 36%, Strategy amplified that move, falling 61% total, nearly double Bitcoin's ultimate decline. And this is where the narrative gets even more interesting. Institutions dumped $5.38 billion worth of Strategy shares during Q3. Peter Schiff declared victory. Bitcoin was finally dead. The media published headlines about massive losses, risky leverage, and the Bitcoin experiment failing. Wall Street wants you to believe this is the end of Bitcoin. But here's what hasn't changed. MicroStrategy, or Strategy, still owns 650,000 Bitcoin. Their average cost is $66,400. Bitcoin's price, as I'm speaking, is $91,400. So they're profitable. They had $7.5 billion in debt against approximately $59 billion in Bitcoin holdings, which is an extremely low loan-to-value ratio. And on top of that, they have multiple cash-raising mechanisms. They have a $1.44 billion cash buffer, and they have multiple cash-raising mechanisms still available. The fundamentals are rock solid. So why is Wall Street attacking them? Because this model works. The reason they haven't attacked it dramatically before is because they thought it was just stupid, some people playing with that internet money, and they basically ignored MicroStrategy. And because this model works, it threatens their entire business model. Let's address their FUD directly. On December 2nd, 2025, Strategy announced that they're forming a $1.44 billion cash reserve, or actually they had formed it over the weekend. The media spins this as an emergency fund, but it's simply just prudent financial management. They're building a buffer to ensure that dividend payments continue during price and market volatility. This is what responsible treasury companies do. Recently, the CEO of Strategy, Phong Le, was being interviewed, and he outlined conditions under which Strategy might sell Bitcoin. Specifically, if their net asset value, or NAV, falls below 1, and they can't access capital markets to raise funds to pay the dividends. The media went crazy. They're going to sell Bitcoin. MicroStrategy is selling Bitcoin. But these are last resort conditions, and they're being transparent about their contingency plans. This is exactly what you want from management of a big company. The next piece of FUD is that their MNAV, or their NAV multiplier, is at 1.14. The media says this is dangerously low, but here's what it actually means. You can buy exposure to 650,000 Bitcoins at a 15% or 14% premium. At its peak, investors are paying over 2.5 times NAV, or net asset value. Now you can get it at 1.14 times net asset value? To me, that sounds like a great value. Now let's address the institutional selling. BlackRock, Vanguard, and other institutions recently dumped $5.38 billion worth of Strategy shares. And you know what? Good. These are the same institutions that have been wrong about Bitcoin for 15 years. The same ones that have been loading up on bonds that lost 47% of their value in the last 5 years. When traditional finance exits, that's usually your signal to enter, not financial advice. And Peter Schiff is taking his victory lap. The gold bug, who's been wrong about Bitcoin since $100, is now saying, I told you so, at $80,500. Peter Schiff has been predicting Bitcoin's death for over a decade, while it went from pennies to $126,000 per coin. I'm not sure I would listen to Peter Schiff. And the last piece of FUD that we want to address is Jim Chanos closed his short position. Even the legendary short seller, who had a large position betting against Strategy, closed that position. Why? Because even he recognized the risk-reward has flipped. This crisis narrative is just FUD from traditional finance that's terrified about this innovation. They want you to be scared. They want you to sell so that they can buy at the lowest price possible. Here's the real takeaway. Traditional finance is attacking Strategy because this model works and threatens their whole business model. Think about it. If companies can preserve and grow shareholder value by holding Bitcoin instead of paying ridiculous fees to Wall Street money managers for bond portfolios that lose value, what happens to traditional finance? Strategy proved something revolutionary. Corporate strategies don't have to accept a slow death by inflation. There is an alternative, and it's working, despite what you hear in the news. Companies like Metaplanet in Japan, Semler Scientific, GameStop, Marathon Digital, and dozens more have adopted a Bitcoin treasury strategy. This isn't some crazy CEO gone rogue. This is a movement. The lesson here isn't leverage is dangerous. Cars can be dangerous if you drive them drunk. The lesson is that intelligent leverage on the hardest asset ever created, with proper planning and cash reserves, creates asymmetric upside for shareholders who are willing to weather the volatility. For individual investors, strategy offers something unique. Leverage Bitcoin exposure through a traditional stock. Yes, that means more volatility on the downside, but it means exceptional upside when Bitcoin resumes its long-term trend. A 36% decline in Bitcoin's price turned into a 61% decline in the strategy stock price, which means a 36% rise in the price of Bitcoin could easily be a 61% rise in the price of the strategy stock. For any businesses watching, or anyone that owns a small business, the question isn't should we copy strategy? The question is, can you afford not to? When traditional bonds have lost 47% in the last 5 years, and strategy's Bitcoin holdings are up 500% from their original purchases, the answer is obvious. This pullback is doing exactly what it should. That's shaking out weak hands, punishing those who bought at the top with leverage they can't afford, and creating an opportunity for those who understand what's actually being built here. Michael Saylor didn't just create a Bitcoin buying machine. He created a blueprint for how 21st century corporate treasuries should operate. He's showing the world that the emperor has no clothes, that traditional treasury management is broken, and there is a better way. The recent pullback isn't the end of the story. It's the middle. Bitcoin had 5 of these corrections in the last bull run alone. Every single time the people who bought the dip won. Every single time the people that listened to Peter Schiff and traditional finance lost. The $1.44 billion cash reserve, the CEO being completely transparent, the NAV at 1.14 times. These aren't warning signs. They're buy signals for those who actually understand. Strategy owns 3% of all the Bitcoin that will ever exist. At $177 or $178 a share, you're getting exposure to that position at a 61% discount. Traditional finance is selling. The media is spreading FUD like crazy, and Peter Schiff is gloating. That's exactly when the smart money shows up. What do you think? Are you going to listen to the same institutions that tell you to buy a bond fund that loses 47% in 5 years? Or are you going to recognize innovation when it's on sale? Drop your thoughts in the comments below. The future of money is being written right now. You can either participate or watch it from the sidelines with Peter Schiff. Up to you. Not financial advice. Well, that's it, guys. Hope that helps you understand MicroStrategy a little better. And I hope you got a lot out of this video. Thank you guys so much for watching. I appreciate it. Stay safe. Stay sovereign. I'll see you in the next video.